You ever look at your bank account and think, man, I'm not broke, but I'm not rich either. I'm just kind of stuck. Like, you've got some money saved, maybe $3,000, maybe $5,000, maybe $7,000 sitting in a savings account earning, what, 0.4% interest if you're lucky? And every time you hear someone online say, all you need is capital, you're like, cool, how much capital? Because I clearly missed that part. Here's the thing. Most people don't fail financially because they don't make enough money. They fail because they don't know what to do with the money they already have. And today, I want to talk about 3 specific investment moves, not hype, not lottery tickets, that could realistically turn $5,000 into $50,000 over time. If you understand the math, the psychology, and this part is key, avoid the traps that keep people stuck forever. Because the biggest risk isn't losing your money. The biggest risk is letting time pass while you do nothing.
My name is Jay, and I spend way too much time thinking about money, investing, and why smart people still make terrible financial decisions. If you're someone who saves a little, stresses a lot, and feels like you're always one step behind, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Now, before we even talk about investments, I need to challenge something most people believe.
Challenging the biggest myth. Look, most people think turning $5,000 into $50,000 means crypto moonshots, penny stocks, options trading, or some once-in-a-lifetime opportunity. That belief is exactly why most people never build real wealth, because when you chase miracles, you ignore mechanics. Here's what most people don't realize. Wealth is not built by one big decision. It's built by a sequence of boring, intelligent, slightly uncomfortable decisions repeated longer than feels reasonable. And I'm going to prove that to you with actual numbers.
Move number 1. Invest in cash flow skills before assets. Yeah, I know. You clicked for investments, not self-improvement. Stay with me, because this is where it gets really interesting. According to the Bureau of Labor Statistics, the average American gets a 3% raise per year, if they get one at all. That means if you make $60,000 today, next year you're making about $61,800. Congrats, you just barely beat inflation. Now here's the uncomfortable truth. Your rate of return on skills will almost always beat your rate of return on stocks in the early stages. Let me give you an example. Say you invest your $5,000 into the S&P 500 and earn a strong 10% annual return. After 1 year, you made $500. Cool, but that's not life-changing. Now compare that to investing $5,000 into a high-income skill. Sales, copywriting, tech certifications, digital marketing, automation, data analysis. If that skill increases your income by just $1,000 a month, that's $12,000 per year. That's a 240% annual return on your original $5,000 investment. No stock market can touch that. This is why wealthy people obsess over earning power first, investing second.
Here's why people skip this step. Skills require effort up front. Stocks feel passive. But passive income is built on active decisions made earlier. Most people want the reward without the discomfort, and that's why they stay broke. Ask yourself one question today. What skill could realistically increase my income within the next 6 to 12 months? Then allocate $1,500 to $2,000 of that $5,000 toward learning and monetizing that skill. Not dabbling, not watching random videos, actually committing. Because this move funds the next 2.
Move number 2. Buy boring assets with relentless consistency. Now, let's talk about actual investing. Look, the S&P 500 has averaged about 10% annually over the last 90-plus years. And I already know what you're thinking. Jay, 10% isn't going to turn $5,000 into $50,000. You're right. By itself, it won't. But here's what most people don't realize. It's not about the initial amount. It's about the velocity of contributions.
The math most people ignore. Let's say you invest your original $5,000. You add $750 per month from the higher income you built in move number 1, and you earn a 10% annual return. After 10 years, you're sitting on around $170,000. And here's the wild part. More than 70% of that money comes from contributions, not market gains. People overestimate stock picking and underestimate discipline.
Why this feels boring, and that's good. The human brain is wired for excitement. Investing rewards patience. That mismatch causes people to overtrade, panic sell, chase trends, and quit too early. Boring investments win because they don't trigger emotional mistakes.
Automate low-cost index funds, broad market ETFs, and tax-advantaged accounts, if available. Make investing automatic and invisible, because what you don't see, you don't mess up.
Move 3. Leverage asymmetric bets, the smart way. Okay, now we get to the fun part. This is where your $5,000 can actually accelerate. But listen closely, because this is where people mess it up.
What an asymmetric bet really is. An asymmetric investment is one where downside is limited, upside is disproportionate. This is not gambling. Examples include starting a small online business, buying a cash-flowing micro-asset, investing in a niche you deeply understand, strategic real estate partnerships, equity in a growing private business. Let me give you a real-world example. A friend of mine invested $4,000 into building a niche service business. Worst-case scenario, he lost $4,000. Best case, the business started generating $3,000 a month within a year. That's not luck. That's controlled risk with massive upside. This is where $5,000 becomes $50,000, not overnight, but structurally. Why most people fail here? Because they go all in instead of measured. They risk money they emotionally can't afford to lose. That causes fear. Fear causes bad decisions. The goal isn't to be fearless. The goal is to design risks you can survive. Allocate 10 to 20% of your capital toward asymmetric opportunities after stabilizing income and boring investments. Small bets, smart bets, learning bets. Putting it all together. Here's the real framework. Use money to increase earning power. Use increased income to build boring wealth. Use stability to take intelligent upside shots. That's how $5,000 becomes $50,000. Not because of magic, but because of structure. Look, most people will watch this video and do nothing. Not because they're lazy, but because change requires admitting you've been playing the wrong game, and that's uncomfortable. But here's the truth. You don't need more motivation. You need a better system, and systems beat willpower every single time. If this video helped you see money differently, even a little, hit that thumbs up, subscribe for more, and start with one move today. Not tomorrow, not next month, today. Because 5 years from now, you're going to wish you started now, or you'll be grateful that you did. And trust me, that version of you is watching this moment very closely.